Okay, what's going on? So if you guys make sure the mic's on. Okay, yeah, the mic is on. Okay, cool. What's going on? So I know it's Saturday. I still like to do like my weekly recaps, and then any of them that I may have missed on YouTube. Now I will say this too. For next week, I will trade maybe 2 days of the week on YouTube, like our live New York session, and or maybe three, like Monday, Wednesday, Friday, or Tuesday, Thursday. Just kind of depends on um, what the week looks like, and volatility, and if we see A plus setups or setups that just look better in general, then we'll go for those. Let's see here. So I do have the chat up. Let me go ahead and pull that up, just in case we have some people here if they're just watching the recording. But if you are here live, right, it's a good time to be able to answer questions and go over things. I am gonna be going over Thursday's price action. I don't think I did one on Thursday. Just kind of go over what we've seen, and obviously we'll go over the shorts from Friday. So I just wanted to see a couple things here, see what kind of screenshots I had too from the other day. Okay, so we'll probably be on here for about an hour, just going over those 2 days, and then what we anticipate a little bit for next week. So let me leave this up here, and then go look for these screenshots very quickly. So that would have been 326. So let's see here. 327. Wow. When was I putting in? Okay, so it looks like we had taken that buy position, so I'll keep this one here. Um, I'll use this one from that day. I'm trying to see what these are. Okay, so I know we had a scratch on Thursday, which believe I believe we did. We'll look and see. We want to go over which ones are these. Yes, so this is the right one here. Okay, so I've got a few pictures, a few documents that I'm going to be going over to help me with the stuff for today. So first, like I said, we'll go over Thursday's price. We'll jump right into that. This week was pretty amazing, I would say. The opportunities for our multiples and just overall trends were pretty good. So I would say that they're pretty good there. Okay, so let's jump into this now, straight into the charts. When we came into Thursday, right, so we're going to go just into Thursday's price. We can close this one down. Looking just at Thursday's price, so this would have been Friday's. This would have been Thursday's price right here, right? 1 a.m. Okay, cool. So when we came into that price, what we were looking for, I believe, was the continuations down. But at the same time, based on where the daily had opened, which was going to be here, right? Going into this. So this would have been where the day opened. It did the very almost same thing as you can see here on Friday. It opened up, right? Kind of goes higher and then starts to fall over, right? So once price starts to clear these specific levels on higher time frames, like 24,150, like you're actually getting body candles lower, right? Through that 24,200 area. To me, it kind of starts to show me that we're going to start reaching for demands, right, on higher time frames like an H4, and we're going to start to fill inefficiencies, gaps, fair value gaps, whatever, right? And so by seeing that, it's very similar to what will lead into Friday's bias, right? Which was, a lot of individuals at the New York Open here, we've seen the buy position, which we ended up taking the buy. And if you look at our TP, right, our TP is we're inside the 24,210s, which was just getting right above this wick right here, which was also filling At the time, right, when the price was actually printing, this was actually a 1 hour imbalance, right? So that was a 1 hour imbalance that looked like it was pretty much covered up, but they had like a little area right here on the 15 that you had to have your eyes on. Okay. Now the position we took, these were our actual positions that we ended up taking. So I'll show some of those here, the actual times. So on that Thursday, right, we had one scratch for 162, right? So that's about my average loss. So when I say R multiple, essentially what I'm saying right there is I'm risking about 160 a trade. So when I open a trade on NQ, it's a 4 contract trade, right? And then that's copied across the accounts, but let's just focus on one account, right? So four contracts, $8 a point, 20 handle risk, scratch, right? But on the second setup, after taking that scratch, we bounce back and we ball, okay? And so you can go and look, when we go over Friday, it's very similar on the price, okay? And so how this ends up playing out, let me pull this one back up too as well, sorry. So how this ends up playing out, I'm going to go over on the 15 and 5, but I'm just showing the higher time frame context of what we were looking for. Price was basically already extending down. The daily open was like 24,370s, and we were seeing price already, just making lower lows and lower highs and wanting to see if we could even reach lower into this range on 4 hour to 24,000 whole level. So when you look at this on a 15.5, right, we're not going to look at, this is Friday, but just to get a little bit more like intraday of like what we actually seen and what we played. Now for me, what I ended up doing, and I'll go over the 1 minute price as well. For me, I was looking at that higher time frame area as a key level regardless, right? So if you think about 24, if you're looking at this area now from like a 1 hour perspective, 24,100 was this key level, and this was like our high up here. Okay, so we actually had 24,000 was like a key level where I was anticipating like in this expansion here and anywhere like into this candle like this on that 4 hour, that open of that demand, I was expecting maybe a bounce or maybe price to obviously have some kind of reaction in that area. But at this point, we had already taken our buys under this spike here. So when we got stopped out on Thursday on that first attempt, and you can go back in the video and see the timing and stuff like that. I'm going to go over the entries on those here as well. But you can see that the higher time frame area was still in a really nice fair value gap in efficiency. And I like to see sometimes price respond pretty well back up into the initial balance area of the day or like the overall price of the day. And so on the 15.5, what we ended up seeing on this trade was we've seen the New York Open, which I'll still go ahead and mark that regardless because we're always thinking in point of interest and risk reward, okay? And so this is New York Open right here, this blue dotted line. Now, just very similar, I want to show this really quickly though. It's Friday. Look at Friday's New York Open. What does the first 5 minute candle do, right? Capitulation, break structure, lower low, right? So what happens on Thursday, and we're in a bearish market, everybody wants everything to always just continue bearish, but there's certain signs, right? Very first 5 minute candle on Thursday, 8:30, 8:35. Now it doesn't go and close the body lower, right? It doesn't go and close the body lower, like the candle I showed from Friday, and we'll go over as well. But it shows weakness, but it shows weakness into a demand area, right? And so showing weakness into this area here, but not actually closing the candle, makes me like to look for smaller time frame 1 minute execution situation to buy a position like that, because essentially when you're looking at a 15 minute at this same time, right, so this candle would have printed, this is what all you would have been able to see after the first 15 minute print from 8:30 to 8:45. And so what you're essentially seeing right here is the run on these stops, right? So like when we seen it in this area here, and we're like, it's like 8:30 8:35, and then I was looking at 8:35 to 8:40. I believe if I bring that picture back up, the first scratch, and I'm trying to remember what there was something specific about ES on that day. Let me look at that before I look at the picture here too, because I want to have that comparison. of the same day. There was something specific around that time. Oh yeah, as you guys can see here, ES was holding, you know, pretty good structure here on a 15 and 5, and then this one here in Q, right, was drawing on the liquidity. So there was also that 15-5 divergence. But for that picture that I was talking about, let's look at that really quick. So first scratch. Let's like plot this here really quick, and I'm also gonna bring over that 5 in 1 minute. But first area, because this was 15-5, so I need to actually bring up this one. Sorry. Wicked. And let's bring this. Okay, so then we go back to. Okay. Okay, so now, sorry, this picture just keeps falling off of the planet here. Okay, so now we can look at this time, like I said, and plot this area. So the first buy attempt was, let me go off the replay mode. Sorry, I'm just having technical difficulties here, okay? Okay, that first buy attempt was at 837, all right? Entry price was 115. So 837 at 115, right? Is that what I'm reading? Excuse me. 838. No, yeah, no, entry time. 830, 837, sorry. And then the exit was, so it was only 1 minute. Okay, so 837, 115. Okay. So it would have been right in here, and then at 115. So this was the area I scratched on, but let me teach you guys something that I've learned in my career, okay? Is you're looking for the 5 minute dump. So the 15-minute wick, the 5 minute dump for the reversal type of trade. And so in this situation, when I lost this first trade, I still felt like this was the right area, right? Based on how New York Open had opened and they didn't just fall off a cliff. Like we got a 5 minute break of structure, lower low, right? So the next thing I was thinking is the same thing I was thinking on Friday, okay? So what happens here is price opens up at that equities open, purple dot, makes that new 5 minute lower low. Now, the one thing that I was thinking was potentially if price comes back into this area here, right, and feels the 24,125, like feels the FEG like right in here, right, and then just rolls over, that's pretty much what happened on Friday, right? They just didn't present it the same way. So when you look at this, let me make sure that was the price. Yes, I was trying to long in that position though. When you look at that position, it wasn't a bad idea. Like I said, I would say I needed a draw on liquidity, right? And like usually most of my trades that are more in a higher percentile of win rate, like based on their setup, are always ones that have that draw on liquidity. Okay. Now our second trade that we took on Thursday, right, was at 842. Okay, and it looks like we took that one at. Okay, so we took it at 842 and the price was like 24,104. So 842. All right, 842. Is that right? Let's see here. I'm just trying to see which one this was. Okay, 842. Let's go to the 1 minute because I can't really see which one this was. Okay. Okay, and then let's suck this back up again. I'm gonna pull this up over here so I can see it. I can't keep seeing it. Okay, so that price was on March 26th, okay, and then it says 842. Okay. So this was our entry. So we ended up getting stopped out on the position because it was just a little bit early on that position. I think I was just kind of antsy because I was feeling that we were going to get this type of move. And then, like I said, you guys can go back and look at the recordings. I don't want to have to keep bringing it back over. But we ended up taking this next position at 842. So this is 840. This is 841. This is 842. So we ended up taking that position here, 842. Right now, when I talk about framing up positions, right, I love to have a 5 minute dump candle and a 1 minute mitigation on the right side of that dump. Okay. And so you have to kind of be on your P's and Q's. You have to understand what your entry strategy is, right? What candles you're using. And, you have to have a pretty, I would say high percentage target. In this situation here for me, taking that trade at 842, we ended up getting in like this. We were looking for about a 1 to 3. We were looking for the people who shorted New York, right? Somewhere in this area here. We were looking for those individuals that like would have pressed sell, right? Would have had buy limits sitting under these lows. We were looking for those individuals to cover their position, right? So taking profit. And when they take profit, buy limits essentially fill, right? So in this position here, we're looking for a 1 to 3 to deliver just above that high. And then going above these highs, which were really, really nice and clean, almost equal, you almost can say here at 24,203s here on the 5 minute time frame. And I had used an arrow to draw to the future. And we were looking for the 1 to 5 to deliver back above the New York Open, and then also trying to get back into the overnight price. Now, as soon as we ended up hitting our second take profit, as you guys can see on Thursday, like we ended up looking for that 1 to 5, and like the only time I like to extend the 1 to 3 or 1 to 5 to like the 1 to 7 or the next level, right? Up to those next levels of liquidity is if there's a higher time frame, high probability target. And to me, this M pattern definitely served as, a high probability target, right? Like this coming down like this, and then having this little slip of liquidity. I love areas like this, right? So that was definitely a pretty good trade. Now, we also called this one out live in the Discord. Now, like I said, if I scratch some of them, scratch as well. It's just part of it. But when we turn around and we hit a trade like that, then we're able to still, secure, a $500+ day across the accounts, which is fire, right? So even if you're trading, one account, like I said, to say here, right, to be able to do that and then look at it from this perspective, it's like, look at the duration. Yes, we lost that trade in a minute, but it only took us 13 minutes to make back a little bit over $600, right? So it's in and out type situations, right? Like if you're coming onto the streams, you probably want to be on there right at 8:15, because by time 8:45 hits, a lot of times like 9 a.m. we're starting to find those R multiples pretty quick. Okay, so that was Thursday's position. Everything played out pretty well. Like I said, the scratch was just more from, I think, just being too early to the trade, needing that 5 minute dump candle to be on the right side of it to play it up. Now, going into Friday, I'm going to see what kind of screenshots I had from Friday, so we can go over some of those positions as well. Okay, Friday was our pretty good day, I guess. Okay, cool. So that was Thursday's position. Played back. Anytime you, like I said as well, you see New York Open, and when New York Open starts to sell off, you want to identify. I'm not gonna identify it for Thursday, but you want to identify the New York high, right? So that always becomes a high probability target. I'm gonna have a video that basically just goes over high probability targets and liquidity zones. So that was a pretty good target right there. Like I said, to get to 24,200 to fill the higher time frame, and then the sell off from there. What makes it pretty crazy when you think about it is how buyers like ourselves in that position took profit, and sell limits, right, obviously started to fill, right, and price rolls over throughout the rest of the day and just goes crazy. And then at the end of the day, like I would say, like when it's liquidation time for TS, which is going to be this candle right here, this is going to be 305 to 310, and then the liquidation happens in those next 2 minutes, right? You may experience some of this, actually, because it was so fast, because they sometimes don't roll their times over until the 12th minute. But these end of the day pops, you don't want to try to make a living or anything off of these. I mean, there's no telling, when these things can happen. Now, if you're swing trading, or you have any situation, like let's just say you had shorted from in here around 12:30 and you didn't have any risk trailed out, this would be a terrible situation for you, right? Like to see maybe that 1 or 2 minute candle, just spike up and just take you out because you never secured the bag or anything. So that could be crazy. But going into Friday was a really good day. We traded live with the Discord, guys. If you guys haven't joined the Discord, especially even the free version, the premium version is just set for live trading and then being able to set up like one-on-one calls. And then the free community is just to build as big as possible, and just have like-minded people who obviously trade. So make sure to join that. I've put the link in this description of this video. But I do call out all this stuff live. So I trade, live, and then this is our Discord. I'll show you guys here really quick. This is Friday's position that we all took together. Right, so ended up taking the sells, 23 631s, right, to the downside for 5R. 5R for me, because I risk about 160 per trade, right? 5R for me is about $800. 3R is around that 4 something range. I forgot exactly right now. Okay, but that's the trade that we're about to go over here. Okay, so we'll go over to Friday. Now, Friday was a really, really clean setup, right? Pretty easy setup as well. Now, the one thing I would say that would be misleading, right, that misleads anyone, including myself, right, would be the overnight price, right? The overnight price was pretty misleading for traders, because what it does is it sells off overnight. And if you trade with me or trade in any kind of similar way, I love overnight capitulation bounce plays, right? So essentially what I'm looking at in the markets from an overnight perspective is if overnight, kind of climbs up, right, saying this being the open, right, like this price level, let's just say like here in this area, and then price starts to break down below the daily open, right, and continue to fall, and then this being like our New York time, right, like let's say like New York is like right here where this red line is. Well, by time, you got to think about it. If you shorted above 23,600 and price is down to 23,450, right, you're up over 100, 150 points, right? So what do people start doing? They start looking left, right, on the way up of the range of good areas of liquidity, imbalances, demand, etc., to place buy limits, right? To place buy limits for take profits. That's the functionality of trading, okay? And so when I come into a session like Friday, that's how I'm thinking. I'm looking at this market from this perspective. This is the daily open. Price kind of wiggles around overnight and then falls off, right? So by the time we get to New York, I'm thinking maybe there's one more capitulation before, one more capitulation of early New York buyers, and then price will maybe recover. But the key sign to Friday, right, was how the 5-minute formed with the 15, okay? And so a lot of people are going to play the FEG that formed right here, right? The 623, 625s, they're going to play that. That's why you see so many online people that, won this trade. But the true context behind it was structure, right? You can say the FEG, right, the fair value gap, the inefficiency in that 5-minute was the key, but the key was really supply. The key is to have your eyes ready to identify inside the FEG and then be ready to execute inside the supply. Okay, so let me actually write this down really quick. Because what day was this? Fridays? Okay. Write that down. Have eyes ready. Okay, so to write that down. Okay, so the key to this is the basics of structure, right? When you're looking for a structure, a market structure, you have higher high, higher low, higher high, right? Because it made a new high compared to this last high, right? Higher low, right? When this one goes here because it failed to ever break below this low, right? And then higher high, right? And then there will be these subtle shifts of structure breaks, right? So you've got higher high, higher low, higher high, higher low, higher high, higher low. All of a sudden, price will come in and close lower low, right? That's a shift in the price delivery, right? That's a shift in the structure. Now, the two things that I really pay attention to, right, is when price, if you're going to look for buy positions, is I'd like to see price not only just kind of show me something like 5 and 1 minute, like it's building, right? I'd rather actually see price go ahead and break that 5 minute high and pull back into an area of inefficiency and then reclaim to then go. Reason being is because of Friday, right? Just because price sold off overnight doesn't mean that it can't sell off farther, that we're going to have a bearish day. And so structure right here pretty much shows you the first 5 minutes of the New York Open. What this essentially is doing, oh, cool. What this essentially is doing is creating FOMO in my eyes, right? Like from trading the opening range a lot. And what I mean by that is when you go to Friday and you look at the price, okay, when you go to Friday and look at this price on a 1 minute as well, okay, this 5 minute candle immediately falls from 23,650 almost down to, let's just say, 23,550, almost 100 handle move, right? Now what's happening on this 1 minute is people are trying to play fair value gaps and they have all these different strategies. There's all this different stuff, right? But what they're doing, regardless, in my eyes, if they're not using specific zones to frame their entries, is it's creating FOMO, right? So people could be, like, oh goodness, I don't want to miss this move on a 1 minute, and they start to sell, right, about 23,630s, possibly like 23,000, let's just say 617s, like in this area, 20s. They start to sell it down. But now I'm going to plot this position because a lot of this comes down to knowing where other players are at. Okay. When you see a 5 minute candle breaking that fast, a lot of times most people aren't looking to position inside the supply location like we teach, but they play in emotion and they play basically in a fast move down. So you see this break of structure here on a 1 minute, right? So essentially this would be like price was in this candle here and price closes here, which is a break of structure, lower low, okay? And so what people are going to do is they're going to sell the position right here. And I actually have some examples of actually really good traders who take these type of trades and they still punch out our multiples, okay? But that's why I like to study other traders. Now, when you see most traders see that break of structure and they play here, as you can see, if we were to go back in time on this 5 minute, right, before this candle was printed, that was an FEG, that was an inefficiency in price, right? So like from this low of this candle here down to pretty much how this is going to print here. Let me show this really quick, sorry. Right, so so let's just say from right here to here after this 5 minute candle closed, this gap in price after this closing lower low, remember I was talking about structure, is a really key area. I actually want to see how it responds inside the gap, and then I want to see if 1 minute price can show us some weakness, okay? And that's what we were looking for. And so when you come into this price, what tricks a lot of traders is they see this lower low and they see the 5 minute dump. I know you guys know I teach 5 minute dump and then look for that sign of strength and play up. But what they don't understand is that just because it's a 5 minute dump, did you have a clean 1 minute mitigation on the right side of that, right? Maybe you played the buys in here, which these could have been pretty good buys as well, right? On that idea, right? Like playing on the right side of here, kind of trying to play up, like, right? But this is the key to the 5 minute structure, right? The candle opens here, makes a lower low here. You never get a 5 minute candle to close above that New York high, right? So that supply was set, and the fear of missing out, at that open move on the 5 minutes is obvious because of how fast it falls in the 5 minutes, right? And every 1 minute candle from that New York Open just drips. But that creates so much FOMO that the people who didn't enter, like I said, inside that 5 minute supply, they get stuck and they don't get the most of this move. And so I was grateful that we sat on the sidelines and we didn't try to buy this up, right? Because I was like, I'm not going to be a noob today. I understand this is a 5 minute lower low. I'd rather see a inversion play or supply be reached. Now, when you think about this play as well, I told myself this. I said, if I play this play on the pullback into the 5 minute supply, right, I'm willing to see it go through the New York high here, take that liquidity, and then maybe be able to find something that fits my game plan a little bit higher. But I still wanted to see downside, right? So to see that move, get that 5 minute break, I love seeing that because that gives us time to start to frame up the supply. Okay. Now, what we ended up seeing on the 1 minute is just something that I've learned from watching lots of price. The only way you're going to get a 5 minute wick candle into an area is if there's a 1 minute mitigation inside that area, right? So if it's just like touching an area and rebounding super fast, that's how you can basically know. And I'll kind of go over more and more fractal price over time. But looking at this price here, what we ended up seeing, we were on stream together on Discord, I believe, and we took this trade around the six. I was calling it out around the 23,630s, but I was telling like the guys or everyone on stream, I say guys, we have girls as well, but I was telling the team on stream like those 23,640s look the best because of where they're aligned on the 5 minute, right? But I ended up entering, I believe, around 23,630s, right? So I seen this 1 minute candle starting to break lower, right? And then it closes and then it starts to fill the 1 minute imbalance on this 23,624s. And I like that area down to take out the New York low, right? Because remember I said when price moves one way, right, bullish or bearish at New York opening range, right, it's going to make a lower high. So like this was our New York high. And at this point, when that 5 minute candle started to bounce away, this becomes our New York low, which is where an area of liquidity builds up tremendously. Okay, so playing our shorts down from where we have it marked here, 23,640s, down to even here was a 1 to 3. That's a banger. And then getting not even all the way through the liquidity, we were looking at a 1 to 5. So let's say you have it from the 630s, right? I think we were calling out that 630 area. Like a lot of people I know took it in the chat. So even with your 1 to 3, after it comes up, responds, your 1 to 3 wouldn't have it would have delivered. It delivered so fast, right? That's what I'm trying to say. It's like it literally hit the area, and then we played that 1 minute area to the downside, and your 1 to 3 was going to deliver, and then your 1 to 5 was going to be right in alignment. If that makes sense here, right? If I just drew this line over here, that 1 to 5 was in alignment with the New York low liquidity, which is awesome, right? You want your take profits, especially your TP2, right? Because we took partials off of here and then we let the rest ride to the 100-point move. So essentially how we do it is, let's say you have 4 contracts on, because I showed you guys the screenshot of this as well. 4 contracts on here. At this moment here, when we got to the 60-point mark, half the volume comes off. And then the 5R, so the 100 points left of the whole move, so it's going to be a 100-point move. We're securing at 60. Now, when you get to that 100 points, you still have your 2 contracts on, and you have the option to either trail the market by 2R, or what I like to do is just hit TPs, right? And so we targeted that New York low, TP smacked, and then price ended up coming up later in the day to that same area, doing this same setup, which is crazy. I do want to go over that really quick too. But really clean setup. A lot of people ate on that trade as well. Let me check the Discord on that one, because I believe people definitely ate on that one. So that was really cool. So Thursday, general chat. And then we look at, was that Thursday? Yes, it was Thursday. So people, let's see here. 326 was Thursday. Yeah, so I mean, this is the day Chris went pretty crazy. This is 325, so that's actually the day before. 326 though, we took that scratch, and then like he says here, entry level was 24,101, but first entry was a small loss, but still ended up with 1 to 3. So 594 on the day is pretty sick. Okay. Even with a scratch, so into the downside. Now, and later in the day, if you guys go and study the 1030 time, there was also a pretty good setup when you really look at it, right? Because the timing wouldn't have been my favorite. I will say that. Like I wouldn't have really liked the timing so much, but I would have definitely been studying inside of this 10:45 to 11 a.m. to like 11:15 time. And so what did we get, right? We got our play to play out. Price makes some lows. They come up and kind of fill an inefficiency here and take it lower, lower, low, right? Now where I would say they did the same thing essentially in that second half of the day that they did in the very first part of the day was you're looking at this area here to here, right? All right, so this expansion down, 5 minute lower low, right? And then they filled a good amount of it from like here to here in these 24 or 23,550s. But now, as we come up and what do we do? 5 minute 10:30 to 10:35, we come up and hit supply candle at 23,600. Then we show a sign of weakness, right? Now on that side of weakness, 10:35 to 10:40. Here's 10:40 to 10:45. Last 15 minutes of the hour. You've rejected a supply candle, and now you're inside a supply candle alignment with 80 level, okay? Because the market likes to reject at 80 levels and likes to buy up at 20s, okay? So it's the formation of how it all looks, and then you're asking yourself, where's the new low of day, right? Because the only other target than low of day at this point right here, right, like this would have been the low of day at this point right here, would have been those New York highs, right? Would have been anybody that was still short from 23,650s, like 23,640s, right, that was just holding. But market was bearish, so it wanted the buyers that bought and got chopped up all in this area down here, right? Or seen, at 10:15, this was a pretty good, I thought, setup after, they made the low, kind of came up, makes a lower low, and then this candle starts to hold here on the 5 minute. I would have liked a setup like this, right, to find a 1 to 3, right? Because this would have looked really good on a 5 minute to me to see a 1 to 3 up to break out of the range, and then to see definitely a 1 to 5 to fill the inefficiency and maybe even touch the supply candle. So I can see it if you're managing it correctly, right? But this is a market right now where you don't really want to be in there for too long. You want to be executing on what the market can give you. I tell myself this, what's on my desk every day. Pay yourself as the market makes money available. Act on your edge without reservation or hesitation. Okay? So, thought that was a really good move on the continuation sell side move for the end of the day for Friday. And then I also thought, that after they had made this lower low like this and price started to go high. Now, if this price would have went higher right here on this 5 minute and then came back down, definitely to me more high probable. That's just, for me for sure. But because of how they slanted it like this, I don't think I would have bought that like in this price level, looking at it like that from that square. I don't know if I would have bought that, just me, unless I would have seen like this candle here print higher than there. Like I would have wanted to see it print higher and then come back. Then I'd probably buy that position to potentially break through that New York high. So let me see if there's anything else on here. So for me, that was pretty much Thursday and Friday. We really went crazy in the chats. Good first week. Had some really solid wins. Had some, punches in the face as well, where we had to bounce back. I'd say Thursday was a bounce back, and then Friday, I think there may have been one scratch. I don't think Friday there was a scratch, so that makes it pretty good. What's going on? Hey, Way of the Warrior, I don't know if you've had the chance, but in the description in this post, I actually have started a free group on Discord. And then we also have a paid group where we trade live with no delay. I still will be going live on YouTube like twice a week through the New York session, but there is like a 15-second delay. So, but definitely join the free group if you haven't, man, because we want to create a massive group of traders that are like-minded and whatnot. But I'll probably, like I said, if you haven't, or obviously you guys know how to do this, but you just go back in the live sections and you can watch the replay of this, because I'm pretty much at the end. I went over Thursday's position that we went over, or that we took in the Discord. And then I also went over Friday's sell side move as well. So let's look at a little bit higher time frame to close everything out. And there's not much to work with the new contracts right now. Okay, like there's stuff we can go look at, but not as much right now. So that'll probably be it for me today. Overall, I would say this is a really, really good week. Let me look at this from the 1 hour perspective before we head out of here. The last thing I'll say too is, Monday. That's what I want to talk about really quick too. Was Monday. Was Monday was one of the best decisions of the week for me, right? Because I would have probably got chopped up, or at least had a losing day, trying to attempt to play this. Like coming into the market 6 a.m. to 7, we get a candle that's 800 handles, right? 800 handles plus almost move that delivered the liquidity that I wanted for the whole week. So crazy market, right? So we set out Monday, but we ended up winning Tuesday, Wednesday, Thursday, and then Friday. So the position that we took on, let's see, would have been Tuesday. Looks like I believe what I remember doing was buying up a position in here. I can look it up really quick since we're on here for a second. What day was Tuesday? The 24th. Let's see. What did we do on Tuesday? Let me check the chats, because maybe the chats are the 26th. Or what was Tuesday? Tuesday was the 24th, huh? Okay, so 24th. Which one was this? 25th. So this would have been, so we had an amazing sell on Wednesday too. Oh man. I think I did a breakdown on that one though. From Wednesday. I'll have to look and see which day I did a trade review last. But that Wednesday sell was crazy. Very similar, right? Very similar to Friday's, right? It was a 5-minute setup, but I'm trying to see what that was on Tuesday that we took. The 24th, right? 24th. Okay, so the chat was just I have to look and see, but I know we took Wednesday. Let's see here, what's Wednesday? Wednesday was a really, really nice short. Let me look at that really quick here. 15.5. The reason I'm looking at this really quick is just because it was very similar to Friday's short and how it shaped up. I might have to look. I have to see what the trade of the week is. I'm going to do a market outlook for the week tomorrow, and I'm going to talk about the trade of the week for this week. I want to say it might have been this one. Yeah, this one was crazy, guys. On Wednesday, 8:30, price rallies up super fast, but what people don't notice is context, supply, demand, you know, the things that we look for. And so we came into this trade and I said the same things, right? You have your daily open. We had liquidity under the lows, right? So this was our actual target that we wanted. And then this was actually the day I wanted to go over really quick to finish the call, because this was the day that ES, right? ES had the divergence. That's what it was. Couldn't remember. Now, as you can see, when you look at a 15-minute, right, you have supply on NQ, right? This is our supply area. And on ES, we had a double top liquidity, right? So we love zones where price comes up to an area of price, does like that, and then pushes away because it leaves a pocket of money because of how people are taught to trade, okay? And so they take that liquidity on ES, so we've seen that, and then we've seen how they were still wicking into the supply zone here. So we were looking for, and I'm going to break down this quick trade here really fast. We were looking for this to deliver, but also, like I said, we're in a market where I'm looking for 1 to 3, 1 to 5 times my risk. and either I get that, or if it's in alignment with the TP, yeah, great. But in this situation that day, I know we were grateful that we took the setup and got out of there, because people held on to this and then it just ate up their profits. Okay. And so, for example, here, let's see. This was like I said, this was the trade that we took. 5 minute up candle, right, to frame up. And then on that 5 minute, we ended up seeing the 1 minute break down, come back, and then we seen another like inversion type of play, fair value gap type of play, whatever you want to call it, inside the 5 minute location. Okay. And so as you can see here, we were targeting, even for our 1 to 3, was only from the 24,500 level down here to 24,442. And then our 1 to 5, right, times what we're actually risking on the trade was 24,400. So this was my actual other 5R trade. I ended up hitting 2 5R trades this week. Friday was a 5R trade, right? A 5R trade for me is, based on what my math of my accounts on this account specifically, is $800, right? So really, really good setups when you can do 5R of what you're risking. Now, I wanted that low of day, like I wanted that price here, right, below 24,378. But like I said, that's just the type of market that we're in. Okay. And then I basically had told someone something in here. I was basically saying, if you didn't get out, this is perfect. This is why we took the trade, was the divergence, right? So ES delivering that liquidity at where, guys? 66.80, right? Delivering while this one was failing to break supply. Okay. And so going back to the entry on this, it was pretty clean. I mean, we ended up seeing, like I said, we seen that area play out, and now we only got that to deliver to here, right? So we got to deliver to our TP, which was 24,350, and I was pretty happy with that, because as soon as we delivered this level and hit our 1 to 5, a lot of individuals took profit on that position, and it just rallied right back to the highs. All right, so that was a really, really, I think that's the trade of the week, guys. If you guys want to look at any trades that we took in the Discord, I think Wednesday and Friday were the best ones, right? Because that's sell side. Now, there was also a really good move. If you look at the timing at 9:45 into 10, I was already out of the markets for that day, and I didn't want to take any more setups, but they ended up creating the same setup, guys, in the same zone, the magical zone, supply, right? 24,500. And they fall off to go then deliver the banger of the day, right? So this is the price you want to go study, 9:45 into 10 a.m., right? You've got crown forming inside of a 5 minute supply on a 15-minute supply inside of a 5 minute time frame. That type of price action, guys, is going to get you back to a low of day, or like where they're just building up liquidity, okay? And so pretty good week, right? When I go back and look at it, taking Monday off was a good thing to do. And then I'd say the sell side moves, understanding structure, supply, really paying attention to FEGs. So basically what I'm saying there is 5 minute expansions down that actually body candle close, and then seeing how they respond back in the area, instead of just deciding you're just going to play whatever in 1 minute demand and jackknife play trades, right? It's just, you want to have some good 15-5 structure to your trades. Okay. So I appreciate you guys watching. Like I said, this was it was over Thursday and Friday, but also added in a little bit of Wednesday here at the end. So we'll be back some live trading this week, Monday and most likely Friday of this week. And then if you're not in the Discord, definitely join the Discord, because we're going to be providing a lot of value in there. And then we're going to be going into Q2 here very soon, so be on the lookout for a lot of new content. My goal, like I said, is just to provide value at a higher level and to just grow as a content creator. So obviously I'm a trader. If you guys don't know that, like, I put trading first, then I don't know, but I want to be able to help a lot more people as well, while keeping myself accountable, right? Like, by helping other people and doing the right things, it actually is a blessing in disguise, because then you're essentially in the spotlight, I guess you could say, on if you say you're gonna do something, then you do it. So appreciate you guys watching. I'll talk to you guys on the next one.